This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. And by this time, I'm sure if you're watching this, you've seen the futures down about almost, I think, 50 handles. Dow futures down 500, giving some acceleration to last week's break. Lots of people have been telegraphing this correction for the past year, 2, 3 years. Who knows? Who knows if they were able to stay solvent, shorting all the way up. Lots of guys have been talking about, the weakness in overseas, in Asia, in Europe. And, once it all adds up, you have to be there for when it breaks. And either you get out of the way if you're an active intermediate trader when the range does resolve. And if you're finally looking to time that short, you better be there when it happens versus a year or two prior when the market doesn't confirm your thesis. So, starting back in June, basically, is when Asia started to, give us big breaks and some shots across the bow that there could be some trouble ahead. You look here at the FXI, you'll see here was, the break here in June when it couldn't hold the 8 and 21 day around 49. From there, you had a big move lower, okay, which was a huge break below every moving average out there. You had somewhat of a snapback, and then in the last week or two, we talked about the bear flag in the FXI, and that if the FXI made new lows below 38.80, people will notice it'll raise volatility. So with that being said, last week it broke below that, and now it's probably down another 6-7% with the Shanghai being down 9%. So I guess see how it looks coming into this 34 to 32 zone. If you happen to have sold this parabolic move or got stopped out here, and you're not involved in anything in China and you have huge risk, maybe you try and buy a little FXI either for a trade or put it away, and that would be below 34. But again, not for the faint of heart. As far as Europe, about 3 weeks ago, I think Goldman Sachs put Europe is going to outperform the U.S., and I think that's when it started underperforming the U.S. and started showing technical signals of failure. Last week, what did the DAX do? It broke below the 200-day moving average on Tuesday. We talked about it. Before that, we said if the HEDJ, which is a proxy for the DAX, can't hold 62 to 64 and show some commitment to that move off the lows, it could be a headwind. Get out of the way. And here you have the HEDJ, okay? Headwind out of the way. Different trends. Trends change. This was the 8 and 21-day trend that started the year, which everyone tried to short. Who knows if they stayed the course. And then finally, you broke below the 8 and 21-day, gave you your first move down. It seemed as if perhaps, you just say right here that Europe could lead and show some commitment, and it got above it. And then that's why we said it's got to stay above this descending channel, 63, 62 even. If it doesn't, get out of the way, okay? And then boom, we broke right below. Here's your 200-day, and the 200-day rule. If you break below the 200-day and you don't reclaim it in 2-3 sessions, that means macro selling. And basically, that's what happened here. And now, boom. So now today, with Europe being lower, this is probably opening up well into, who knows here, the 54 range, okay, or maybe even below it. If you are looking for a trade, maybe there's a trade into this spot. It's very oversold, okay, but hopefully you've been out of the way, and, you have, my VTF, you haven't seen me long this since, what is that, a month ago? Anyway, here you go, around 54 to 55, probably big support, and then this is the October low from last year, which we'll talk about with the S&P later. So I would say here's support one around 50. This is like closer to 55 and then 54. And if you happen to be short Europe, I would probably cover into there. as far as the S&P, I don't know how many times we talked about 2040, the 200-day moving average, and everyone until it's blue in the face. And basically that range resolved, and it started on Wednesday when the Fed minutes showed that all the stimulus, all the QE, everything isn't even good enough for them to raise a quarter of a point, for rates, and that's when the banks started to play catch up to the downside, and we broke the 200-day moving average in 2040. You look at the SPX, okay, and you look at this range here, okay. Remember, how many times do we go over the range? How much longer can it stay in? Are we going to get upside resolution, or are we going to get downside resolution? Here's your upside. Here's your downside. Nobody truly knew. Some people probably guessed and said, okay, I'm guessing higher, I'm guessing lower. Who knows? Really what traders do is traders, measure, and we start to get an inside range here. So with that being said, inside, pow. This, by the way, was that Wednesday, which is pretty much what got me sort of flat. Unfortunately, yes, I could have gotten short and et cetera, but you know what? That's not, I'm not really that good at it. So at least out of the way is where cash is a position. So this was your spot to get flexible, get out of the way right there. If not, you had Thursday morning. And look at that. This engulfing bar engulfed the entire range. What do you do when engulfing bars, in a stock engulfs the entire range? You get out of the way. And then this was Friday. Pow, there's your follow through. If you got short here, thinking, okay, you know what? From 2130 down to 2040's 90 handles could get us a measured move down to 1950-ish. Okay, let me get short. You know what? You got paid. And then this was that level, coming into there. Okay, and now today, obviously, we're breaking very far below that. So now you got to start looking at other points of reference, because now you had your range. Here's basically the measured move of it, and now you're getting more downside, and you never truly know where that downside is going to go. So I do see a level of support right around here. Let's get this out of the way and make it a little bit bigger so you could see it. Okay, we'll do it over here. So basically this right here is 1926, okay, and right over here is 1904. So that's how we're getting 1904 and 1926. So if you come back over here, you'll see, that's this spot, 1904 to 1926, okay, and this could be a spot that serves as support today, okay, and then really underneath that is that October low, which comes in around 1820. So if we go to the monthly chart, or let's go to the weekly chart, you'll see it a little bit better, okay, and you'll see how, I posted this chart on Twitter last Thursday right there before this. I said, okay, if we do not hold this spot, we could easily see this area, okay, and obviously you don't know when it's going to happen, how fast it's going to happen, but then pow. So now the question is, how much further down does it go? Everyone's going to say 15%, 20%, crash. You know what? Nobody truly knows. What you do know is here. This is a spot. Okay, again, what was this? This was 1904. This is 1926. I'm going to try and buy a little bit in here today. This morning, if we get there quick, I'm going to be looking to buy it. Okay, but in the back of my head, if things get nuts, at some point we could see this 1820, and who knows, maybe we bounce here, come back up, and then still see that at some point. Right now with the oscillators minus 100, chances are I would not be shorting right here into this 1904, 1926. I would look to potentially be buying that. Let's take a quick picture of this chart right there. So everyone had the same chances to make their adjustments within there. There's really not much to hang your hat on any sector, except for some of them started to add up for the weakness when, all of a sudden the Qs played downside catch up on Friday. Okay, which, boom, look at this trend. Trends do break. Here is an upper accelerated trend in the Qs, okay, and this basically broke here. Okay, so that was your get out of Dodge, and then it broke this support right there. Get out of Dodge, especially if you trade active intermediate trends. Now what? Okay, we'll see, where it comes into. That's all you could do now. You could take out your trusty piece of paper and map out support. I do believe it's a little bit below this one now. Okay, and then you have another level here, and then you have just like I guess you have where's the October lows? The October lows are somewhere in here. So let's go back to the daily chart, because it's going to be important to see what happens here with the Qs also. So the Qs, you go like this. It's below this spot. Okay, so it's already took out this 100. So the next thing is you have a gap here. So I guess right down on the gap, 95.22. 95.22 is quite a ways down. So I don't know if we get there today. then I guess you have, okay, you have some spots over here. Okay, this is that 96 I put in my morning note. 96.50, and then you have the gap here. This whole upper range was taken out, and hopefully you got out of the way. So maybe some people got short. It took out the 200-day, and now it has a long way to go underneath. We also spoke about the head and shoulders pattern in the IBB, which was concerning. And that was after it lost the 50-day for the first time in 4 months, a subtle change. Subtle changes is what you measure as an active trader when momentum switches. So either you got out of the way or you got, short. And if you look here, we talked about this head and shoulders top pattern that was starting to show its face, okay, with the left shoulder, the head, the right shoulder, and this is when basically it broke this neckline. So some people say from 400 to 360, that's 40 points. Well, from 360, you're already at 340. So the next big level comes in, actually, what was it? It's 340. So 360 minus 40 is 320, and that gives you closer to here. So we'll see if you got out of the way when this trend broke, okay, right here, and the 50-day broke closer to 375. You got a trade maybe you could put in here around 320 to 330. There was a few trades last week that you could have done too. So at this point, that's what the bios look like. And now we'll see if, you could be buyable in this area. Close below the 200-day also, which is a sign not to be long it, sign to be out of the way. So all of these sectors are starting to catch up. Just one more sector to talk about was the banks. People were buying the banks thinking that rates were going to go higher. Me too. I was saying I think September liftoff. And then, obviously, the devaluation of the yuan and all these kind of things started acting up and correcting them. Okay, maybe it won't be September. But you didn't really have to know whether it was or not. You could have waited till Wednesday when the Fed said, put off, not lift off, see how the XLF reacted. And all those people that were buying the banks ahead of time, got out of the way. And that's what helped fuel this move lower. Okay, and what did it do on Friday? It took out the 200-day with a pro gap through it. Started to lose the momentum. See, I get out of the way when it breaks the 8-21-day right here, because that means that this flag that looked okay, that maybe we can go higher, said, we're not going higher, we're going lower, so that's when momentum was lost there. So that, obviously I have no banks on or XLF on, but that would be one spot to say, okay, no momentum here, everything's breaking down, let me get out of the way, and that's before that. And then at least on here, if you're like, what does Red Dog say? Below the 200-day, not only are intermediate and active guys out, maybe macro guys are out, and now all of a sudden, here we are. I guess your spot to look at would be right around this 23, and then the October lows. So the question is, do we test the October lows from last year, or do we stop, somewhere in the middle? I'd love to see some kind of pause first, because if we go straight there, people are going to get their teeth knocked out, and chances are, if we go straight there and we don't hold this 1904 to 1920, I'm probably going to have a bad day because I'm going to be looked to be buying, some levels in there. But again, it's Monday. If you look at 1987, I was talking to a lot of smart guys. It's the same similar pattern where Wednesday was we're breaking a little bit. Thursday was the hard break. Friday was the downside. The weekend was the fear. Monday was a crazy day, and then Tuesday was even worse, and then that was it. So if you start positioning today, Tuesday might be hard for you. But also, if you start positioning today and Tuesday's the gap up and you're trying to be perfect, you might not catch it. So you got to really know what your risk is and whatnot. So those are some of the levels hopefully you wrote down in the sectors. When things are like this, you do not trade second, third, fourth tier names. You do not trade air stocks. You look for pretty much the best stock in each sector that have already been correcting and see how they act and where they could potentially pause and where there could be opportunities. And though I know Apple has been weaker and below the 200-day, for psychological purposes, it's good to know what's going on. And this is a good lesson on not falling in love with your stocks. I love trading Apple to the long side, but if it's not there, it's not there. Okay, and this range resolved before the markets, below this. Okay, then it lost the 200-day, came back, failed the retest, gave you somewhat of a bear type flag, right? Here's the pull, here's the flag. You had downside follow through on Friday. So now the question is, where can it go? I was hoping that I could maybe get a shot around here. Thank goodness I didn't take that shot because we closed on our lows and I have nothing over the weekend. So now the question is, what's next? Does it break 100 and accelerate down and, and cause some fear? If that's the case, you have 95, and then you have a small spot here, which is a gap, which is around 101. So first spot could be 101 to see how it reacts, that's 2 quarters ago earnings gap. And then if that doesn't hold and they want to break it below 100 and things get really crazy, you know, maybe into the 95. So below 100, if it happens fast, I'll probably be a scale down buyer, you know, maybe at 97 or below because I know I can handle that. But we'll see how it handles this first point of reference there. So Apple gave you lots of clues to get out of the way. When I had the gap down after earnings, bear flag, boom, bigger bear flag, boom, and now, you know, if you're not in Apple, you know, perhaps there's an opportunity somewhere around there for you. So that's Apple. Another one, you know, the two names that had good earnings that fully changed last week when everyone said, okay, this is it, money can't hide in Google and Amazon anymore. Happens fast. Google, boom, okay, filled this gap, okay, and all of a sudden became not a strong stock. How could you have seen this if you were in it? Look at this engulfing day right here, okay. Here's when it looked good, looked like it could take out the highs, and then that day, boom. That could have gotten you out if you're a momentum trader. Or some people probably even got short. And then, you know, this was Friday. This engulfed this entire range. So if you didn't get out here, you got out there, and now it's probably filling the gap. And I don't know if you're rushing to Google, but, you know, you want to see how it's acting. You have 618 is one spot, and then the gap fill, and then the 200 days all the way down here. So write down 618, point of reference 1, 604, and then 579. Okay, I'm probably not going to be trading Google today. Or Amazon. Amazon, you know, look at that. Right here, it looked as if it was okay still. You know, gap up after earnings. You still had the 21-day being protected. Which way would it go? And then this day right there said, this one first said, no, it's going lower. This was your engulfing day, engulfed the whole range. And then I bet you some people took some short and got paid on Friday. Closing the low, so still not even looking for a buy. And now, you know, here we are. So I would write down for Amazon, I guess. It might be there, might be below it now, 481. And then I guess down here where it kind of broke out from comes into 460. So spot 1, spot 2. But it's an expensive stock. You got to be careful there. Netflix also gave you some clues to get out of the way. We talked about this upper flag. Can this base on base continue higher? The first little spot that said was when it couldn't break and close above 126. Little red dog reversal. Some people might have sold it there. Then on the weakness, could it hold 120 or was it going to break that trend? Was it going to break this spot, okay, which was your last upper move? And what did it do? Boom, broke that spot and had follow through. So now, you know, is it worth the look today? Yeah, you know, it's coming into the base, and if something's going to lead us out at all, you know, first of all, you have the gap fill here. It's probably well below that. Then you have like 94-ish. So this is something that, you know, I'd rather trade the Netflix over Google and Amazon just because it's a tiny bit thicker and you could handle a little bit better. But a lot of these things are also getting down to the 200-day. So this is support 1 to write down, which is about, what is that? That's 175. And then you have this, and then you have that. You know, but you had a way out, guys. Here was your red dog reversal right there. You know, this is when you had some weakness even before the market broke, and then pow. So I don't know if you were waiting for your short and you've been getting squeezed this whole time because you had an opinion. This little spot right here was the market confirming, you know, that it needs to come in. And then you had follow through, and now you're getting real follow through. So we'll see what happens there. Same thing for Facebook. Facebook looked great right here, right? Didn't it look good? Trending, looking great above the 8 and 21 day. You know, 91.80, big support. Would they protect it or would they not? And then, boom. That had to get you out of Facebook. You had to get out right there and engulf the entire range. And that's on top of a red dog reversal right there. Okay, and then Friday, boom. So now today, you know, if you're not in it, it's worth a look. Okay, it's going to probably be near the 200-day, which comes in at 82.89. So I will try and be a buyer of this. If I had to buy anything, this is something that I would look at down here. Okay, but again, you don't want to start too early because if you look at what Facebook has done, okay, in the past 2 years, it's had an amazing move. So all you're seeing is a move down to take away this last push up. So be careful. I do think that you know, we'll see what happens here, but this is going to be a little bit of a macro spot. Okay, and I'm hoping it holds. You know, but we shall see. So if you're not in it, I'm not in Facebook today. I'm going to look at it, and that'll be a trading vehicle for me. But I'm going to take some care there. So for me, I'm most likely going to trade the spiders into, you know, that 190 to 192 area to see if it holds. I'll look at Apple. You know, I might check it out around 101, but really I want some kind of acceleration below 100, below 97. I feel comfortable buying that into 95-ish. Google and Amazon, I'm just going to stay away from. I'll watch. Netflix, maybe. And then Facebook, I think, is a little bit easier. It's thicker. And if they want to keep something somewhat, you have the 200-day right there. As far as oil, that's been a falling knife, and, just see if it stays below 40. As far as the XLE, it's been a great lesson for a lot of people, and I always show this every time because I want people to realize, you never know what's going to happen. Here is when the trend in the XLE changed. Here is your upper head and shoulders pattern. Left shoulder, head, right shoulder, boom. So this was your first move lower, and then what did it do? Went below the 200-day. Did it reclaim it? Was it a selling trap? No. Did it get back above it? No. And now look. Guys, you could have been out of this at 90. Not selling the top. I know the topping is a process. Could have sold it here, not down there. And then even if you're trying to play a bounce, which we've tried to a few times, I was long it on this day. I said, hey, who knows? Maybe, we get a little bit of a bigger retracement. And then on this day, I said, I'm out right there on this one. Because I said, now I could go right back through the lows. And was it a painful sell? Yeah. But would it have been a lot more painful down here, now especially into this open? Yes. So you want to honor your stops, and you want to make sure you stick to your plan, especially in times of volatility. Now, if you're a short-term or active, or intermediate player, hopefully you get out of the way late last week, and maybe you're in cash, maybe you got short, maybe you're short over the weekend. Into this down open, you probably want to cover. But if you're looking to now take advantage of this 10% move off highs about, you got to do with the plan and know your risk. Because again, we could get to Tuesday, and even if we get a bounce today or tomorrow, who knows what type of bounce, and then do we see lower prices? So I'm going to try and be very active, very vocal on the VTF. I don't know how involved I'll be on Twitter because I only have 2 thumbs. So I'm going to be trading and talking, and I'll try and follow up when I can. If you are a macro investor and you're my age or you're my wife's age and you have a 5-year-old kid or something like that, and you have money in a 401k or a 403b or a 529, stay the course. You survived the tech bubble burst. You survived the financial crisis. You survived everything. You should probably survive this. So if you have monthly flows going in, continue to do that because over time this will help your average cost. And I know as trading, it's hard when volatility hits, but we all know the last 6-7 months has been tough. The range of buying it when it looks good and, shorting it when it looks good and buying it when it looks bad, we knew it was going to change. That's why I said at one point you can't buy that dip on support because it's going to break fast, and that's what wound up happening. That's why I did not buy on Thursday, Friday, and it's like, what, I'm staying out of the way, and that hopefully helped some of you guys. But again, longer term is different than trading for alpha and trading for cash flow. You're going to be watching the TV. Everyone's going to be talking about disaster and crisis. And yeah, it's going to be a tough time period. But again, if you're living within your means and you're putting a certain amount of money every month, do it. If you're trading, though, you better have a plan because you could be blown out of the water. And hopefully we'll be here to help you not get blown out of the water, make some money, embrace the volatility. But you got to make sure to use your resources and be prepared. I'll see you at the recap. Have a great day.